Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and today is Friday, the 2nd of September, 2011. And we're getting on, this is very early, at 12:20 in the afternoon, so we're going to be closing up the gold market in about 10 minutes in this general areas where it's going to close. And I want to do my jig. I am the happy guy. You know, last month I came out in August, and I told you I didn't like August. Just wasn't a great trading. I got great letters from some of you, comments, hey, just stay your course, blah, blah. Didn't get wrong, the market. I missed a big move in the gold market. For those of you that get my twice daily update, read the update last night, read the gold report. I'm dancing. That's all I can tell you. Here is the gold up $50 almost. Silver up strong. Even platinum's looking real good right now. And we're still getting a bid in all the bonds and the notes and the stock market coming under pressure. Let's face it, nothing's working to create jobs. Nothing. They keep telling us what they want out of Washington, but if I'm right, and I heard this today, that this was the first jobs report where we had absolutely no growth since 1945. Now, I may not have all the facts 100% right, but it's unbelievable. We didn't add any jobs. And what are they doing in Washington? Why aren't companies hiring? And that's what you're going to hear more of. I'm not here to lecture on it. I'm not bright enough to. But I'm bright enough to understand what's going on. And we have a real issue. And obviously the Republicans and Democrats, well, I think the Republicans think they got the Democrats. They got the president, low ratings, no job growth. These type of unemployment numbers, has a president ever been elected with these type of numbers? I've given you the base of what I think is going on in the minds of some. So here's the gold market, and the gold market is still caught in this wild range that we had when we got up to the 1917 area, dropped back to 1705. The market narrowed in, and I want to show you yesterday. Look at how the market had narrowed in. These are the type of patterns I often look for in a chart, and part of the reason, we'll go to the next chart, is that, and if I narrow it in, you see what it's done there. I'm going to come and add to that day, but the most important thing to me is adding the swing line study. Because what the swing line study did is before today's action, you were down. We didn't know if this low was going to be anything. I drew that in today because once you took out 1845.10, you confirmed that the break low 2 days ago is that low. In other words, it's the apex of the low. And we already know the 1705. So the market is done what? The market has now gone in and made higher highs and higher lows. That's very important to the way that I analyze charts. On that, when I add the 18-day average of closing prices, I see that that just keeps moving itself up. Market hasn't even been able to close under that 18-day average since all the way back in July, right back here. So my thought is, as long as the swing line makes higher highs, this is your filter. I want to see that happen. I certainly didn't want to see this lower low now taken out, the one that I just showed you, but you're far from that, and away you move to the upside. Your 45 and 100-day average, they're far away. So what about upside targets? Well, you're knocking on the door. 1893.70 is the Bollinger top. So I realize people are going to say, if it gets through that, it's going to 2,000, it's doing whatever. Okay. I'm not arguing with you. What I am saying is you're approaching a resistance point in the market. And if you use window envelopes, which I do, and I don't show them here to be too many lines on the chart, this area in the 1880s is already one of the profit zones. Yep. So I'm a real happy camper. Now the question is, can the market consolidate this, or what does it do? You're liable to come in, and I think you realize this, Tuesday morning when you get back to work and find that things in Europe went really south. There's no way to know. Sovereign debt issues happen, gold goes. We already know that what can the president do in his speech to propose how to get jobs done? All he can do is make a proposal. Everybody's going to be waiting for Uncle Ben Bernanke because he doesn't need anybody's approval. He can enact things. That's what the Fed is there to do. So we'll see what happens. But one of the mandates of full employment, it's not only not being met, we're so far off target that something is going to happen. That's my opinion, at least, and that's how I'm going to view these things. You're not even overbought in the gold. So there's more room here. Sure, you're going to get corrections, but the fundamentals are set up in such a way that it's going to take something dramatic to shake it loose, and I don't see that happening. The silver market is elected to not play like copper, and again, it's decided, hey, I am a precious metal, and that changes from time to time. But right now, it's clear, higher highs. You don't want to get back under 41.20, so you're far away from that. You're $1.50, $1.80 from it. Your momentum is still turning up. This is a bullish chart, and 43.57 is the next target. The market that is feeling the pressure right now, not terrible, but feeling some of the pressure, is the copper. You know, copper consolidated for a long time here under the 18-day average, got over it, and then went right up to the Bollinger Band top. That's fine. Now the market pulls back a little bit, and that's okay. I think stimulus packages, when they come out, are very bullish this market. I think people are underestimating where copper may go. I think that money, lots of money worldwide, is going to be thrown at economies to make things happen. And production and copper usage, I think, will go up if they're successful. In the crude market, you know, we were talking just yesterday, and I said, do you come in, and I'll give you an idea. You're overbought, you're approaching your Bollinger top, not an area that I would teach. And this is what I do. I teach trading people to come into. Rather, I'd tell them, wait, let's see what happens if you get back to the 18-day average of closes. Well, now you're back there. Now the risk is to not get under 82.95. The one thing you know on this market is that it tracks the Dow Jones. Go and put a Dow Jones chart, and I should put this in this section. I put it in the other section already today. Run a Dow and put your crude oil right over it. You will be shocked at what you see. You're trading a proxy for each. Which one do you want to go with? It's really that simple. Here's the Brent backing off, but the Brent has an embedded stochastic. So the pullback to me on this Brent crude is bullish. I'm looking for ways to get a position recommendation out to my customers that makes a bit of sense. So I'm looking at that on the bull side of the market. Same thing in the gasoline. It hasn't turned down. You've got an embedded stochastic. Way too much risk. Going to put a stop back under the most recent low, not the way that I would teach you to trade. So I don't have a game plan yet, but I can tell you the technicals, while the market's down today, they haven't been hurt. They still look, as far as I can see, good. Here's the note market, and as you can see, the note's winding up, and this is what I often look for. This is that black line that makes up the Bollinger Bands coming in, and now try to imagine that I've got a pressure cooker or steam, and I'm cranking it up. Something big is going to happen. Whenever you start taking these in this narrow, you get moves out of them. So I hate to tell you, but it appears lower interest rates. Again, it's hard to believe, but it's different parts of the yield curve that are all being impacted. You know, last night I wrote my gold report, and if you're a regular of mine, you got the report yesterday. It gave you the ideas. I showed the charts, gave you the seasonal charts, the crossovers where they happen, the daily charts, the weekly. Everything there. And I said I thought 1845 was going to be a key number here. I would have liked to have seen the market actually pull back a little lower for even a lower entry point. Given the current fundamentals, it just doesn't look like that's in the cards right now. So if you're interested in this report, it's as timely as I can make it. Those that get my reports and go to my website to sign up, www.irapstein.com, or just call us. It's a phone call. It's toll-free, 1-866-973-2077. Yes, we do call our report list. There's no question about it. If you're not going to trade with us, well, after a while, what the heck? Go get the information elsewhere. If you're going to trade with us, we want to get everything in your hands we possibly can. Okay. And by the way, even over the holiday, leave your name and number. We'll get back to you. So let's look at the gold-silver ratio. With all this action, Have I not been pointing out that the market is stuck here in the 40, 45 level? Today you're at 44. You're not going anywhere on that yet. But what you watch now is what the stock market's going to do, and then take a look at the crude. I want you to get into some of these habits of looking how these different markets go hand in hand with themselves. We're finishing up, as I said, right now the trading. So it looks like gold's going to finish off the week around 1875. I don't care what it does the rest of the day. At 12:30 Chicago time, the market closes, and you're going to be around $43 an ounce in the gold. I'm Ira Epstein. I want to wish everyone a happy Labor Day. I want you to remember that the markets, a number of them do open on Sunday night, even though it's a national holiday in America. Then they'll close. They're open again Monday morning, part of the morning, and we start getting back on Monday afternoon, back into regular time schedules on the electronic markets. Going to be an exciting weekend. Don't drink too much and have yourself a good time. I'm Ira. I'll be eating the barbecue just like everybody else, and I'll see you on Tuesday.